If you're buying SoFi stock, the biggest question is, number one, are you buying it overvalued? Number two, when is this thing gonna break over $30? And number three, what do we expect from earnings? Today, we're going over all three of those things. And I'll tell you right now, I don't believe SoFi is overvalued. I think right now, you're buying it at a good valuation. And let's jump into exactly why. I'm also gonna show you why SoFi is mimicking successful companies, but they're doing it at their own pace, which in my opinion also is solidifying them as being one of the top mid caps to own for the long haul. The first thing I'm gonna show you though is it overvalued, right? Biggest question out there right now. It's gone up so much. Like, I'm just giving you for instance, over the past 6 months, SoFi stock is up 163%. Right now, I want to highlight going back to $14, $15. When I mention cheap stocks and I say buy it as stock and forget about it, this is exactly what I mean. When I told you about Oscar at $14, $13, right? It ran to 20, 22. Buy it, forget about it, set an alert, come back to it later. This Upstart, Affirm, Zillow, Open Door, a lot, Rocket Mortgage is one of my new ones, right? This is why I say this, because we're buying stuff at value. We're buying stuff that makes logical. Now, this one I think you got to pay a little bit more attention to now, because you're getting back into actually finding, you're getting into true value now. People are starting to recognize, is this the next Robin Hood? Is this going to go crazy over the next few weeks, months, years? But let's jump into it. Now, again, so this is why the question is SoFi overvalued? It's gone up from $14 to $30, right? $30+, right? Now, let's very quickly do this. I don't want to spend all day doing this, but let's just quickly identify. Last earnings, you did $858 million. Before that, 770. Before that, 740. Before that, 690. I'm not going to go like entire year, like over a year back. That's just crazy. But like, number one, you're growing. Going from 690, 3 earnings ago, 740, 770, most recently 850, and I believe your expectation is $1 billion. No, sorry, it's a Robinhood number. Closer to 900 million now. But you're growing pretty good. Not crazy, it's not Nvidia, it's not Palantir, but you're growing good. Great numbers right there. Okay? You're averaging around $840 million right now a quarter. Times 4, you're pushing in roughly $3.4 billion. Let's say 3.2. Let's conservatively say $3.2 billion a year. Okay, so your value of the company, what you're bringing in a year in gross revenue, is 3.2 billion. Conservative, it's really making more than that. Okay, your market cap is 3.4 billion. It's basically a 10x valuation. That's good. Okay, that's a great number to look at right now. Giving you a for instance, let's go to Robinhood. Okay, I'm not saying they're the same company, but let's give you a for instance. Robinhood, right now they're doing about almost close to $1 billion. Let's just say they're doing $1 billion a quarter, right? They're not there yet. Before that, they did like 927. So let's conservatively, let's say they did, let's say $1 billion a quarter. So let's say they're doing a little bit under $1 billion. So let's say 3.8. They're doing roughly 3.8 billion a year, okay, at around $980 million, right? So roughly 3.8 billion a year. What's their market cap? Robinhood. Again, we can't lie with the numbers. They're sitting at $120 billion. Now, again, they're different companies, but I want you to identify. This one is about a 30x, right, versus a 10x. SoFi. It's a win in that book. So again, I still think you're buying it at a good value. Important to understand that. We're going to go more into the chart here in a second. Now, so we understand. I don't think it's overvalued whatsoever. I think it's solid. I think it's a great name. I like it. I love it. This is what you like to see. Now we go into the metrics of why. Why do we continue to love it? Why do we continue to like it? Right. And before I forget, I also do want to go into Twitter real quick so I can show you guys earnings. If you're not following on Twitter, I recommend doing so. You get all the updates, everything I'm doing, everything I'm watching, etc. Earnings as well posted on there. So SoFi's earnings, I believe it's the last week. Yeah, it's right here, the 28th. So not this Tuesday, but next Tuesday, you'll have SoFi earnings coming out. I think it's pre-market it's released. I could be wrong, but go check it out. Anyways, so very important to that. Now, why do we think SoFi is going to continue down? Why do we think they're going to keep going up? Now, I said they're mimicking companies, right? Very important to understand. And I think they're mimicking and taking notes from Robinhood. And this is what successful people, this is what successful companies do. They don't just think of a bunch of brand new ideas every day and start implementing them. No, they look at what people are doing, what companies are doing that's working, that users love, and then they make it a little bit with their twist. This is the very definition of what Apple does. Apple hasn't made anything original in like 20 years. Let's be totally real, okay? What they do though is they find good products, they change the name. So instead of saying AI, it's Apple Intelligence, right? Which is hilarious. And then they go into a name with a little bit of a twist and they call it their own. That is what Apple does. That is what they've been doing, okay? Now, SoFi is doing a very similar thing. Now, they are slowly branching out, if you will, okay? But their focus right now has been user engagement and getting more users. We talked a lot about this. This is a great understanding of what Robinhood did. Now, before 2020, 2021, you wouldn't have really been like, Robinhood's one of the best brokers. Like, you wouldn't have said that. Now, some of you still might not, I don't use Robinhood, so I want to be transparently clear, but I think for the average normal American, it's one of the best entryways to understanding things. It is, okay? Again, 2020 to 2021, look at that user growth, right? Look at what happened. Now, COVID did happen, very important to understand, but they started bumping up their marketing. They started advertising more about options, more level 2 data, getting you more charts, more information, and now they're still growing from that, okay? Very important, and this did spike even more in 2023 to 2024, very much worth mentioning, okay? They had that, like, this 2021 to 2022 was a bad season because the whole buy button thing, but again, it wasn't just, they just got all the blame pinned on them, but it was every broker took the buy button away. Crazy, but anyways, that's the biggest thing, is this overall jump in user growth, etc. And that is what they are focused on right now over at SoFi. If you look at what SoFi is doing from 2021 to 2024, look at what they're doing. Look at what they have accomplished here. Around 2-3 million users. To 2022, they were at roughly 5. Then in 2023, they're at 7. Now they're upwards of 10. This is in 2024. So now they're upwards of like 14, etc. So I have to find the best charts. I think the charts visualize these things better for you guys, but it's important to understand what's actually going on behind there, right? Very, very important. And again, they're following some of these same paths. And now more recently, they introduced more options, paths you can take, things along those lines, really getting it to the where you can start just investing. Now, it's also worth mentioning, there's so much competition out there, right? Especially with the specific investing space. So it's important to realize that's not SoFi's game plan. If you want to understand SoFi's investing game plan or like their business model, let me make it as simple as possible. It started all with like student loans and just getting loans in general, right? That's the basis of them. Let me explain to like you're an elementary student. You might have watched some of my videos on SoFi, so I want to repeat myself for anyone that hasn't watched it, okay? That's the basis. So their goal was to hook people in the beginning, and that was a great, honestly, entry point. I mean, imagine if you were already tied to Robinhood while you were in college and broke. And that's what some of these people are doing with SoFi, which you can call it terrible, whatever you want. But they offer pretty low rates for their student loans, et cetera, compared to some other people, worth mentioning. And you can refinance with them as well. But that's really what they did. They got these young kids, and then they built on that. Can we get them investing? Can we get them a mortgage? Can we get them, et cetera, right? We want them to come to us for their credit needs, their investing needs. We want to be where they use their money. We want to be the middleman for all their money. And that's what they've done. That's what they're building out. And again, it's important to realize they're doing this very slowly. They just kind of finished what they're doing with options. Like they just gave you freedom to get a little bit more aggressive with level 2 trading, et cetera. Very important to understand that. And that's what's happening right now. And that's what's going on with the deeper user engagement with the latest options trading expansion. That's simply put, that's all they really did. It's nothing really crazy. It's just they're finally getting up to speed. But they're doing it in a way where their platform, you never hear issues of SoFi's crashing. SoFi's a terrible platform. SoFi has terrible customer service. I had a terrible experience on SoFi. You don't hear it. You just don't. It's very important to realize that. And that's what they've done. And it's all based off of this long-term investment narrative of future growth assumptions and future success of what they're doing based on what they've already accomplished. And this is what you like to see. And in a lot of ways, they've done a better job than Robinhood as far as saving face and keeping a great brand, right? Now, I think Robinhood is at the point of like they're just all publicity is good publicity because everyone's using them. I mean, Robinhood, you're basically gambling now with the platform. Very important to understand that. So again, This is more the fundamental side of what's happening. And I do believe they're on pace to have great earnings. Now, the most interesting part of SoFi, which I don't even think really goes into their earnings, but it's going to be the outlook of what you expect with SoFi over the next few months and weeks. Simply put, we're going to go into the chart. I promise you can skip ahead if you really want to. Is yields. I've said this in almost all my videos, and I don't think we're seeing enough people talk about it. The 10-year yield, if you want to look at it, it's a US 10Y on TradingView. This is one of the best metrics of understanding mortgage rates. When the 10-year goes down, typically mortgage rates follow. Very important. And I can even bring this up for you as well. If you want to go to this website, it's called Mortgage News Daily. Pops up just like this. You can go down to whatever chart you want to look at. Go to the 30-year. We'll go to the 5-year chart so you can see where we're at. You're looking to break back down this very big level, around 6% on yields. And you have a rate decision being made next Wednesday also. Very important to understand that. So again, yields are tracking back down. Now, another thing that I keep tracking for you guys is the previous big dip we had on yields literally a year ago last September when we had our first rate cut. Back then we had our rate cut and then yields spiked right back up. They went just straight up. Mortgage rates, as you can see here too, you went down to 6%, you spiked back above 7%. Big concern, right? Big no-no. But as of right now, you're still trending to the downside, wanting to break back down. And the market's definitely pricing in a lot more cuts and interest rates to drop. Now, again, this has a ways to go, but it's important to understand this strengthens SoFi's business model. This encourages business. You have to understand, no one wants to really refinance anything. And I'm just using mortgage rates, but as long as mortgage rates are high, you're going to see credit rates being high, auto loans being high, student loan rates being high. They're all going to be high. Very important to understand that. So very important to know. When you look at what's going on here though, as long as rates are high, it's going to put SoFi in a sticky position on that side of the business model, not just, investing, but their bread and butter, refinancing, loans, etc. Right? And you need to understand this part isn't flourishing, but I promise when you get below 6%, you'll be below 6% on mortgage rates for your first time since 2022. Very important to understand that. Then you start moving to 5%, 4%, you're going to have an exodus or a mass amount of people that are flooding the market, not an exodus, but flooding the market of looking for refinancing. If you've bought a home in the last year, I can almost guarantee someone has called you. I would love to see your comments down below. Someone's called you about refinancing already. Someone's already called me, which again, you're like, Tyler, did you really buy a home? I built this house, so it's totally different. But still, people have called me because they know that I bought a home or I have a mortgage or a loan on my record right now. Very important to understand. So again, this is going to keep happening. And the guy, it's funny, the guy I was talking to, like, it was crazy. Like, dude, he was like, you're using every sales tactic in the book. Point is, you're going to keep seeing it, and it's going to get more and more and more aggressive. So things you should be looking for. This is ultimately what's going to really heat up SoFi. Very important to understand that. Now, again, Sofi Stock, what's happening here? This is the most interesting part as we look at the chart and where we're at. I'm going to tell you right now, I believe SoFi is at a crazy point right now. I actually just mentioned out in Discord. And also too, guys, I didn't really do it in this video, but if you guys want to see what I'm trading, how I'm trading, etc., the Discord link is down below. You get to go what we're into with futures, what we're looking at as far as our scalps throughout the day. These are all of our scalps we took today. Monster trades, by the way. Netflix was a monster. AMD monster. Tesla pretty good. Didn't get all the way into back into 350, right? 350 or 450. I don't even know where you're at. 450, right? But guys, 447, still a monster trade, but still nice. All that's mentioned there, trade ideas, etc. So check it out. The link is down below. You can see profits and everything. Starter plans also available for the time being. Check it out. But again, that's where we're at right now. Okay. And when you look at SoFi's chart, again, people are quick to panic. People are quick to get scared. But this is kind of played out picture perfect on SoFi. Okay, this is SoFi's all-time chart. This is the weekly chart. This is not a short term. This is a high time frame chart. Okay, you came down to 24/7. Your previous levels here. You can obviously see. And then this is another big level, 14 bucks roughly. But you tap that level. We'll go into it. But you can see you bounce, and now you're sitting back at all-time highs, basically above your previous all-time high. Very important to understand that, right? You want to make sure that's understood. That's clear. You can see we came back into that off our first SoFi video. Perfect buying opportunity. Now, As of this yellow line is your 50-day moving average. All my averages are literally pinned to the daily chart, so I don't use small time frames. There's only high time frames for them. But you can see you're grinding above your 50 daily moving average. Great sign. Okay. Another thing that's grinding above its 50-day moving average is the S&P, as you can see here, which is very impressive as well. So again, SoFi, as long as you're holding 28.3, you're looking for the breakout. You're looking for all-time highs. And again, I am not usually the one of the people that's like pushing this agenda of like, okay, buying your highs is a good idea. You know, buying obviously at 25 was a much better place to be buying. But as you're sitting at these levels, you need to realize this is, you know, price discovery is where you get your most aggressive, strongest moves. Okay. SoFi above 28.3, highly bullish. Another viewpoint here, IWM. Had a bit of a concern here, but IWM on the weekly, SoFi still, I still think this is considered a mid cap. I still think IWM pushing up can help SoFi push up as well. If you look at the most recent push on SoFi, it's kind of following IWM as well, worth mentioning, which is also grinding its 50-day moving average. But IWM here, again, I will forever bring this up. And again, this goes more into detail of what I'm looking for, why I'm looking for it, etc. But like I was saying, IWM number one, I'm not looking to go long on IWM. I'm looking to go long on mid caps that either are inside IWM or move with IWM, worth mentioning. Okay, that's number one. Okay, but IWM is sitting in a position number two that you haven't had in years. This is, it's the most untalked about subject in the entire stock market on social media right now. Google it. Google IWM, Google the Russell. Why is no one talking about this? Okay, you zoom out. Let's get rid of the moving averages so you can just see the chart for a really clear picture here. When you look at this, look at how good you really look. Okay, so let's go back to 2000, 2008, your housing bubble. Okay, this is IWM. I know I'm going on a tangent. Listen, pay attention. I don't care. You take off the video if you don't want to watch it. Okay, massive level here. $85. You sit here 07, you have the 08, obviously like crash, you dip, yada, yada. You sit this flat line resistance, you eventually break out in 2013, 4 or 5 years later. All right. Next up, you come into this spot. It's not as clean of a level, I'll say, but still a level nonetheless. You come to this level, 2014, you get above it, you come back below, yada, yada. And then eventually in 16, you break above, and then you have another massive run. Okay, and it's worth mentioning these runs are massive. You go from 87 into 130. That's over a 50% move. From here, your breakout will use this high here. So you go from 128 into 170. Almost a 50% move. Well, it's 40%. Okay, your next move. This is more recently. 2020, 2021, you get your flatline breakout. Remember, this lasts from 2018 all the way to 2021. You break out here from 172, you go into highs, really going like here 233, but you end up pushing to 243. Okay, we'll use 233. You push up again, almost another 50% here, around 40%. And now we've sat in this range from literally 2021 until now 2025, and you're attempting to break out as we speak. Okay. Now, it's also worth mentioning if you go look at the stock market and how it performed during this period, it was very bullish, very much so, risk on. Okay. Now you're trying to break out again. Again, you don't get this type of opportunity ever so often. Now, I'm going to tell you right now, the logical move here is just stock, right? You're not opening yourself up to a crazy amount of risk, but you're able to capture and ride the move. Now, some of you are like, guys, I want to get rich quick. I mean, that's my dream. That's my move. Do whatever the hell you want to do. A lot of people are going to make a lot of money on options during this time, but I don't want to be the guy that, you know, encourages people to YOLO. And this channel is for education, to more conversation between us as almost like a medium, and then Twitter is a better way for me to do that as well. But I just relay my thoughts, what I'm looking at, different setups, what I like, and it's just me yapping to a camera ultimately. I love to answer questions. I love to go over stocks. You guys love SoFi, so I like to cover it as well. But this is one of my favorite SPACs that came out. But I think you are in one of those crazy opportunities. Now, I do think some people are going to blow their accounts. They're going to miss out because they're going to get way too aggressive, and they're going to think they're going to miss out, and then womp, 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 right? If you're going the options route, buy time. Like, have time on contracts. But I genuinely believe SoFi and really the market is in one of the craziest places ever. And right now, the stock market's basically back at all-time highs. SPY, QQQ, IWM, okay? You're doing that amidst a trade war with China. These are things to consider. And you're doing that with the government shutdown. If these things get resolved, we continue to cut rates. What do you think the market's going to do? Like, we're going into the end of the year. Just statistically, how do we usually do in the end of the year? Something to think about. That's what my views right now. I love where we're at. You look really good into earnings. Keep your head on a swivel. Big fan. Let me know what you think down below.